Okay. So hey guys, welcome back to TradFi and Bitcoin Club. So today will be the second part of Capital in the 21st Century. This article was written by Alan Farrington. In the first part, we covered 2 points or 2 parts: the axiom of capital and more things, cheaper things, and new things. I think we need to revisit it today and have a brief recap and then continue to like third, fourth, and fifth point. So, what I have planned for today is I will not um, I will not just read it out, and I will try to articulate it in my own words, and maybe then I will refer the PDF, and let's see if I have explained it or I have articulated it in a better form. So, like going back to have a brief recap. So, in the first point, the author wants us to ask a question about, like, in the Bitcoin space, we usually ask a question about what is money and not ask what is capital. So, the author wants us to ask the question of what is capital. So, in the last session, if you have understood that basically Austrian economist like Hernando de Soto defined capital as economic potential energy, and also he defined capital as tools. um, Capital is also illiquid. So I gave an example where, let's say, you have a manufacturing plant where um, that plant has some machineries. So that machineries are essentially tools, and that is your capital, right? So uh, capital, the author tries to define capital as basically economic potential energy, or the tools which help you do things much efficiently, much more like the key thought was to do more things, to do new things, and to make it cheaper. So this was a brief thought while we were doing capital. Um, Now, uh, Steve Jobs also gave an example of he called it as bicycle of labor. So he gave an example where, let's say, a man wants to walk 1 kilometer, then he will require some X amount of time. But if that same man is now riding a bicycle, then that 1 kilometer is covered in less time with much lesser effort and energy. So essentially, bicycle is also our capital in this case. Now, we can look at why money is liquid. I mean, it's easy to move, but it's not real wealth. Like, author wants us to have this thought that money is not real wealth. Uh, I mean, we want money, but real wealth is like totally different thing. So now coming to more examples which we discussed in the last session is, for the first one was bicycles, the other things were computers, softwares, and machinery. So the bicycle is the capital, like it's a tool that it helps us to reach our destination in much less of effort or less of energy. So it is a form of capital. Other examples are like machinery, which I also talked about. I talked like a computer. Steve Jobs described computer as bicycle for our minds. So it is also one form of capital. then let's say, I mean, what do we have to give up or forego in the present moment to build these tools for the future? Um, like, for example, you want to build a bicycle, or you want to build a computer, or you want to build a machine. What what will you have to like give up today to make these tools tomorrow? Can like anyone wants to answer this question? Like, what do you think that um, you will have to give up today to like make some new machine, or like to do some new things? uh, it's an open question to anyone. If you
Take
guys
a
can,
shot at it.
yeah, go on.
Yes. I think you'll have to, if you have to build this bicycle or computer, you will have to divert resources which you could have used for consumption. You could have eaten a banana or a cake or had wine. You'll have to, instead of that, go and buy some iron. And so you'll have to delay the current consumption and believe that you will have more capital in the future to consume.
Yeah, good answer. I think this is what essentially you need to forego to basically create something new. Uh, so, like, articulating it up. Basically, if you want to create these kinds of capital, you need to put in money. You can't put in capital to create capital. You need to put in money, and money is perfectly liquid, homogeneous. Like, think of a dollar. Every dollar bill is same to, like, it's fungible to every other dollar bill, but every machine is different in its own. Like, for example, my bicycle is different than your bicycle, or basically capital is illiquid and heterogeneous, so you can't like exchange it with some another. So this is how author tries to make a point where uh, he says that the real wealth is essentially these tools and not liquid money. I would like to like take an example where, let's imagine you are in a deserted island, and you can choose one of the two boxes. Box A has like $10 million in cash, and box B has tools like saws, fishing nets, seeds, and a manual which helps you to build a shelter. So, again, it's a question like, which box will you choose? Um, it's an open question.
Um, uh,
Okay.
Actually,
Yeah.
that box having that manual and all the things which are required for the survival
Yeah.
will be
Yeah.
important than the $1 million.
Yeah. So yeah, absolutely. I think every one of us will be choosing box B, because you are on a deserted island and you can't do anything with this $10 million of cash. So essentially, the real wealth comes with capital and not with money. uh, this thing might vary in some sense, but more 99% of the time you are wealthy when you have capital and not because you have money. You can argue that you can buy things with money, but still you should have these tools, or you should have these things to be really wealthy on that deserted island. Now let's compare. If there's a person A and person B. Person A goes with $10 million cash and person B goes with the other box with fishing nets, saws and seeds. Essentially the wealthy person will be with box B and not box A. So uh, real wealth is not how much amount of money you have. Real wealth is basically how much amount of tools or how much amount of capital you have, or what kind of capital you have. So the author defines it as like money is just a claim on wealth. It is useful to trade, but it doesn't actually do anything by itself. When you compare it with capital, capital can itself do things, but money cannot. So there might be one use case of money in this deserted island example, like if the temperature is dropping, then you can burn that cash and it may provide you heat. But other than that, that money is just useless on that deserted island. So real wealth is considered illiquid because you can't just instantly swap a factory or a specific skill for something else like you can do with a dollar bill. It takes time and effort to build. Yeah, that's essentially true. This is essentially why if a country printed trillions of dollars for every citizen and burned down all its factories and farms, would that country be rich or poor? That country will be poor. That country, that everyone in that country would be a millionaire, but essentially the people in that country will be poor because they don't have real things. They don't have capital or tools to like live their life, because that dictator in that country has just printed like a big load of money, trillions and trillions of dollars, but every citizen is just holding the dollar bills, but not essentially what, like he doesn't have the things to live life. Now, what I will do, I think capital is understood, money is also understood. Now, I want to go into the third part, stocks and flows. Now, in the today's world, uh, most of the companies are concerned about what will happen in the next quarter than what will happen in the next decade. So, because of this, what is happening essentially the company is burning is uh, uh, going back to our example of the country, like that country printed trillions of dollars but they burnt out their factories and farms. So similar a kind of similar case is happening with the companies as well. So the first example is like stocks and flows. Now, coming to stocks and flows, I would like to give an analogy here. Uh, let's take an example of a bathtub. For example, there's a bathtub which is full of water. Now, the water in that bathtub is essentially the stock, and let's say you have a tap which is filling that bathtub. That is essentially the flow. So you can understand this: stock is the balance sheet of a company and flow is essentially the income statement of the companies. So in the current world, what is happening, the people are more focused on income statement rather than the balance sheet. Because I am more into these Bitcoin treasury space, I thought this is like this example clearly applies to Bitcoin treasuries and all other companies. What I was thinking when I was reading about this is uh, like I am doing something, like I am learning credit and all. So I gave a thought around this. Um, so, for example, let's say there's a company who has a bond which has essentially a triple A grade, or it's an investment grade bond. It has a rating of triple A. So essentially, that bond gets this triple A rating based on its there are criterias, but most of the times the AAA rating is based on the cash flows which you are generating, which essentially means flow, which essentially means the water coming from the tap and not the water which is in the bathtub. So um, this is what I think, but people usually don't consider the amount of risks which can stop the water coming from the tap. And uh, this is what I think, which is the problem in our fiat world. um, let's say a company which is like cash flowing today, but what's the guarantee that that company will be cash flowing tomorrow? Because of AI, the world is changing. So recently there was a hack of Spotify. Essentially, in that hack, what happened is um, that guy hacked all the digital music and everything which Spotify had, and he uploaded it on torrent or some open source thing. Essentially, now anyone can go and download that song for free. So Spotify's business is based on how secure they can make their music, or like how unhackable they are. But in the age of AI, I think even if the hack doesn't happen, but uh, AI is making songs nowadays. So uh, essentially, these kinds of platforms, I am very doubtful that the cash flows which they are enjoying today, uh, will they continue it to enjoy it in the future? I highly doubt. So this is what because I'm learning about credit and all, and how these rating agencies work and all. This thought came into my mind when I was going through the stocks versus flows reading. Now, as I was talking, in the current world, the world is essentially running behind income statement, the flow, and not giving much of importance to the stock. Now, back in 1929, when this Warren Buffett's guru Benjamin Graham wrote this book called as Intelligent Investor. So this is my personal thing, that because of Bitcoin, I think we will go back to the world of Benjamin Graham from today's world. So if you go and check it out in the market, the P ratios, the price and earnings multiples in the market are way higher than what it is discussed in the Intelligent Investor book. And why this is happening? Because of fiat money printing. Essentially, what is happening? Our country example. The dictator has decided to print trillions of dollars, and the second part is not yet happening, but the first part is happening. The dictator has decided to print trillions and trillions of dollars. So uh, this is making us, like, this is building us in a habit to spend cash immediately, and this is making us a people with high time preference. YOLO kind of living is growing. So essentially, this is what happening. So another question which comes to my mind is what, let's say you are a CEO of a company, and what might you be tempted to do to your factory or your, like, to make the numbers good today, even if it company, if even if it hurts the company next year. Most of the companies are following the first criteria to make the next quarter better. They are uh, like, they don't think long term. They just think what I will be reporting in Q1 and how I can improve my Q1. In some cases, improving Q1 makes sense, but in the long term, I think the thought should be how I can build a company which will last for a decade. That should be my thought, um, and not about how I can, like, push quarterly, like how I can report or how I can beat the earnings estimate this quarter. So these kinds of accounting games are being played in the current world. So what they do some adjustments in the accounting statements, which helps them report higher EPS. And how they do, that's a different kind of like, we will have to do a different session for it. There are ways to do it. So, like, uh, there are cases, for example, there's a two-wheeler electric EV company in India which essentially marks revenue as whenever the scooter leaves from their factory and it is in the outlets, for example, it is in the showroom of that EV company, then they mark it as a revenue. It's completely flawed. Like, how can you mark it as a revenue? But essentially, this was done in that EV maker case. I don't want to take a name. You can Google it and check. But essentially, that happened in that case. So let's, for example, the XYZ scooter factory, they made 1,000 scooters in a month, and they just transported that scooter from the factory to the outlet or to the showroom, and they reported revenue. That is wrong, I think. Essentially, the revenue should be when, like, how many EVs have you sold, how many scooters have you sold in that quarter to the end customer. That should be your revenue, and not the scooters which have come out from your factory and you have sold. So, but the thing is, in today's world, the companies who are doing this, essentially they are raising money from VCs, and not companies who are building it from scratch and building a profitable business for the longer term. So this is what happening in today's world. So this was essentially the stock versus flow. People are much more concerned about flow, much more concerned about the profit number go up in today, but not concerned about wealth or like building a strong balance sheet. So the opposite thing is happening in Bitcoin. So he talks about margin of safety, then he talks about price to book value ratios and all. There will be times in the market where you will be getting the companies at a discount to their discount to their net asset values. So basically, there will be times when you will find a company, let's say the company has 10 crore worth of land, 10 crore worth of machineries, and that company's market cap is at 15 crores. So when the money is hard to print, these kinds of these kinds of opportunities come to you. But in today's world, it's very hard. It's almost impossible to find these kinds of companies today because of trillions and trillions of dollars floating in our economy. So because of Bitcoin, let me give you a recent example. So there is a company named SWC, Smarter Web Company. It's a UK based Bitcoin treasury company. Now they have a clean balance sheet. They have around some 2000 odd Bitcoins in their balance sheet. They have a website design business which is covering their running cost or fixed cost, which fixed cost and operating cost. Company was trading at a NAV of zero point 0.7 just like a week back, and today that company is at par to 1 times NAV. Even Metaplanet was trading at zero point 0.8 or 0.86 times NAV. This is what I see when we go to the whole argument of this Bitcoin helps to price capital, and essentially I am seeing with it with my own eyes, like the companies who are building balance sheets. Because of Bitcoin's volatility, market is overreacting, and because of the overreaction which is reflected in the share price of that stock, I can literally buy that stock at zero point 0.7 times or zero point 0.8 times NAV. It's essentially I am buying one Bitcoin for zero point 0.8 Bitcoin. So this is what happens in a hard money kind of a thing, but it's not possible in fiat world. So this was one of the example which hit personally to my mind.
Can I ask a question?
Yeah, go on.
So I wanted to, and how should I refer you? I am the AB002. What do you go by?
You can call me Digant itself. No worries.
Okay. So on the stock versus the flow,
Yeah.
I see how the stock is important. But do you think the flow is also important? So example, I have good stock, but there is no flow, and my expense, which could be in the example of your bathtub, is the water outlet pipe. And if outlet pipe is going at a faster rate and my stock is high, but there is no flow, then that stock is depleting as well, right?
Yeah, true.
So, is flow not important at all? Is that the issue, or is that the conclusion, or is that the flow and the way the flow is represented? The example that you gave of the EV vehicle, where it's not the real flow, but it's a financially jugglery created flow, which is the issue, or is there some other insights that we should try and noodle around?
Yeah. So, good question. Personally, what I learned is basically in current world, we are concerned about we are more concerned and not about the amount of water which we have in our bathtub. So for me, let's take again the EV example. I think in the current world we are exaggerating the flow and not looking at our and not taking into account how much amount of water do we have in our bathtub. Absolutely, it's important to have flow, but the flow can stop anytime, and that's the problem if you value things based on flows. So in my CFA curriculum, the thing which I got taught, like the basic thing which I got taught was discounted cash flow analysis, so DCF. Because of this, what happened is we are more concerned about flow. Absolutely, flow is also important, but it is, I think, it is not as much important as the current world is giving it value today. Because I gave an example of AI. I think AI can disrupt or will disrupt most of the flows of the companies out there. Now, when flows will be disrupted, how will you essentially run the company? I think at that point in time, you will have to have, uh, like your bathtub should be, uh, your bathtub should be full or should have good amount of water in it to keep running the business until you find some new tap. So the question is right, that is the flow irrelevant or something? The flow is relevant, but how the current world is working is, it is giving too much of importance to the flow. This is what I understood.
Got it, Digant. Yeah, that makes sense. So I agree with you to say uh, what I understood is what you explained is that there is over indexation on flow, and there
Yeah.
is that flow given the rapid change of technology, it could be variable. So in a standard DCF, you assume, and that's available for the company. So in the example of the Bitcoin treasury company, the Bitcoin on the balance sheet is real. It's the stock. If the flow even stops, they have more wiggle room and more opportunity to look for new flows. Versus if another company has no Bitcoin or bought in the bathtub, then they will essentially very quickly go bankrupt.
Yeah. Or maybe I can like articulate in a different words or different thing, is the current world is obsessed to increase flows, which they call it as growth, and not obsessed about actually growing the stock. So I think this will help us understand much better. So we are looking at the QOQ growth, like my company grew by 30% as compared to the last quarter, but we are not looking at the growth of our balance sheet. We are looking at growth numbers of profits and revenues, but we are missing the growth of our balance sheet. So in our example, the growth of balance sheet would be making the bathtub bigger. Or let's say if the bathtub was half full, then the, like, we should strive to make it 75% full or 100% full. But what currently in India, there are startups who have essentially gone IPO, and yet they are yet to figure out, like, uh, how will they essentially sustain to make, like, this date they are spending 1.5 rupees or 2 rupees to earn 1 rupee. So uh, I think this is happening because we are valuing the earning of 1 rupee, but we are not concerned about, we are earning 1 rupee, but to earn that 1 rupee from our bathtub, we are like letting go 2 liters of water, and the intake is 1 liter of water. So this will not sustain. Coming to our example of the country where the dictator decided to print trillions of dollars, and burning or selling out everything which the country has. So he sold everything, and now in the short term it would be very good because he sold, and things in short term will be very good for the people in that country. But in the long term, or we can take one more example where
Digant,
the
I just want to interrupt you,
yeah, yeah,
if you may please. Uh,
yeah, yeah, yeah,
just I actually I am not that much a financial guy. We still we are. I am in the doubt of what is stock and what is flow. Can you also give a simple example? For example, if a restaurant is there, a very basic
yeah.
example of a restaurant, and for
Hmm.
example, a capital of, for example, 20 lakh was required to open that restaurant. Now it is being
Yeah,
opened and it is running. Now what is stock? What is flow? And just with that, a very simple example, if you can give.
yeah, yeah. So stock is basically the tables, the chairs, the uh, the maybe the machines you require, like microwave and all, gas. All these will be your stock. Also, stock would be uh, basically any asset which you have in that restaurant is your stock, and the flow will be uh, whatever income you generate by in the restaurant. But what is happening in today's world is basically you are selling the table, chair, your microwave, and reporting it as your income. But I think in the short term you will have money, or you will have flows because you uh, sold stuffs from your restaurant. But in the long term that restaurant will not live. So the
Perfect.
flow would be, yeah, yeah.
Good. Thank you.
um, Yeah, so just giving a brief summary. In the today's world, we are concerned more about increasing profit, increasing revenue, and not concerned about increasing our balance sheet. So that's why uh, it is. This is basically happening because of fiat and fiat games. Like we can say that. Uh, Coming to our point, how will things change, or
Digant,
how? Yeah,
one input, maybe one thing to challenge ourselves on:
yeah,
is flow only revenues or flow also includes profit? I would assume the profit is more of stock and flows is largely revenues. If you're making revenues with a lot of profits, that's automatically increasing the stock, correct?
yeah. Good point. Good point. Actually, we should consider revenue more of a kind of flow, and profit essentially will go to our bathtub.
Correct. So, over indexation on revenue and forgetting the stock total, and whether that revenue added to the stock or depleted the stock is
Yeah,
the maybe the difference that Alan wants to highlight. That a lot of us are, or a lot of companies are focused on increasing flows, but those flows are not material if they don't create incremental stock.
yeah. True, true. Uh, thanks, Abhay, to like correcting or making a better way to understand us this thing. Uh, Now, coming to next point, the author now talks about how Bitcoin fixes this. Uh, like basic example, let's say you have cash today. Like this happens with me all the time. If I have cash, or just think of it in like other example, you go to a shop, and that shop accepts Bitcoin as a payment. What you will use to pay. It accepts both fiat and it accepts Bitcoin as well. Personally, I will I will pay cash and not Bitcoin. Uh, I mean, many Bitcoiners will argue, no, you are not supporting business and all, but this is my personal choice. Like I will want to get rid of that cash, or I will want to spend that cash today and not save it for tomorrow, which will not happen in case of Bitcoin. Let's say we are in Bitcoin world, and we know for the fact that if I delay my gratification to consume a thing, maybe 5 years down the line, or 10 years down the line, I will be able to consume more. This essentially this thing will happen on a Bitcoin standard, and this will help us to not go YOLO and spend recklessly. So essentially, the answer comes to like, no, I will not spend my Bitcoin, and uh, this is how I will focus more on building the stock rather than uh, generating more revenue. Uh, Again, going back to our bathtub example, what I will try is if the outflow from my bathtub is, let's say, uh, 1 liter, or then what I will try is, or I will try to curb that outflow to zero point 0.5 liters, or I will try to make more, like I will try to add in more profit or more water, like 2 liters of water. What is today what is happening is I am spending 2 liters of water and earning 1 liter of water. So this is essentially happening. So in the case of our example, like in the case of Bitcoin, what will happen if my cost is like 1 Bitcoin, I will try and figure it out hard that I will be able to make 1.5 Bitcoin, or I will be able to make 2 Bitcoins. And this is how essentially will the world look like. And to do this, what will happen? Again, to going back to our these things, new things and cheaper things. Now, to make 2 Bitcoins, what I will try to do is I will try to do R&D, and I will try to make things more cost effective, more efficient. When I say cheaper, it essentially means I get more efficient. When I say new things, I will try and discover some new area where I can sell something and earn more Bitcoins. And when I say more things, I talk about like I am spending 1 Bitcoin, but I am creating something worth, uh, let's say, earlier I was making 10 t-shirts an hour, but now because I had like I had now uh, I have put something in R&D, and I came out with new machine which helps me to produce more. So these things will happen in case of Bitcoin. Now coming to Bitcoin's apps, the first was Bitcoin mining. Now, the basic definition or the standard definition of Bitcoin mining is Bitcoin mining secures the network. It is technically correct, but the author here wants to define it as just a minute. The author here wants to define this as um, the global network of miners, not just as security guards, but as distributed network of capital that earns a return based on energy efficiency. So, when you think by this example, what you will do is basically you will find, first of all, more energy, or cheaper energy, or newer energy resources. So, for when you say more energy, now Bitcoin miners have it is pretty innovative industry. Like we come to know about how a guy is running miner based off waste energy, how he is doing grid balancing. To the people who don't know what is grid balancing is uh, basically if a power plant is generating x amount of power, then that power plant will keep generating that x amount of power, irrespective of what is the demand. So there are times when demand is higher and there are times when demand is lower, but the power plant can't produce or can't do like can't produce lesser energy when demand is lower and can't produce more energy when demand is higher. And that's the point where Bitcoin miners come in. Bitcoin miners say, hey, like we can help you like balance the grid. Whenever you have lesser demand, we will buy it from you. And in some scenarios, the people who are balancing grid, essentially they get paid. So for example, I am mining Bitcoin via balancing the grid. The power utility company pays me to help me balance that grid. Why? Because it's very hard to or understand it from this point of view. Like if my plant stops because of current lesser demand, the cost to start that plant again is way higher than to pay that miner and keep my plant running. uh, so because of this, there are some examples in the world where you will get paid to stabilize the grid. And this is one of the example where Bitcoin miners have figured out. The next like cheaper energy sources will be like solar or wind energy. These kinds of energy are cheaper, so uh, Bitcoin miners have also figured out these kinds of energy. Then newer energy, one interesting example that I read. So there's a country in Africa, which so there's a village where they have this waterfall, but in that village there was no electricity. But Bitcoin miners came in. They started so there was this hydro power plant. They built this hydro power plant and they used the extra or the new form of energy from that water power plant or hydro power plant, and whatever is left, that energy goes to that village. So that village didn't had electricity, but because of Bitcoin mining, and because Bitcoin mining is can be done in any remote area, they started Bitcoin mining there. And that village was that village got access to electricity because of Bitcoin mining. Because before that, essentially the energy was being wasted and the village didn't have had any electricity, access to electricity. But Bitcoin mining came in, and like now that stranded energy is being used. So this was one of the examples of Bitcoin mining, how it made complete sense.
I think
Coming
Vikant,
to,
additionally on that
yeah,
example of Africa, I think
yeah,
the example of Africa also includes elements of to run a hydro power plant, you need a minimum load for it to repay operating cost.
Yeah.
And that village was still, or that urban center was still far away. That transmission cost will be higher than the generation cost. So
Yeah.
it was unviable to run a hydropower plant to just feed that village. But because, as you rightly explained, Bitcoin becomes the consumer of last resort, and whenever there's extra energy, it can consume all of it. That then became a viable project so that the electricity users could pay for the electricity, and whatever was the minimum viable size of the project, the extra energy could be absorbed by Bitcoin mining. So that's how the economics of it, in my reading, worked on that example.
Yeah, absolutely. Absolutely correct. I mean, the the hydropower plant didn't make sense to like cost was not making sense to transport the electricity from that waterfall to like the next urban center. And here's where Bitcoin mining came into picture, and it solved the problem for that village. True. Uh, Next, coming to the Lightning Network and how Lightning Network is uh, making more payments, making cheaper payments, and making newer payments. So the author applies the same more cheaper and new framework in the Lightning Network. Now, he defines the Lightning Network as a tool for capital allocation that earns a return by making payments efficient. So, the one definition of Lightning Network is helping Bitcoin to scale. But the other definition, which author refers, is it's a tool for capital that earns a return by making payments efficient. So essentially, when you say making payments efficient, you are making either more payments or you are making the payments cheaper, or you have like figured out new payments or new merchants to make payments. So one of the examples of more payments, like traditional fiat rails like banking networks have walls. They stop cross-border payments. So uh, you can't send tiny amounts of money via like fiat payment rails, because the cost to like transfer small amount is is higher to that. For example, you want to send 100 rupees and the cost to transfer 100 rupees is 1000 rupees, then essentially it doesn't make any sense to send 100 rupees via like cross border payment. So this is one of the example where Lightning Network came in and it figured out more payments. Then the second example is uh, in a in a centralized network like Visa, the operator wants to keep fees high to maximize profit. In Lightning, essentially every node every node competes to route your payment. This competition drives the cost of sending money down. So because every node is competing with every other node, uh, because of this, the cost of payment in Lightning networks goes much less and less. Like it is making payments cheaper. And the last criteria of new payments is like the text describes a type of payment that is impossible with a credit card because the transaction fees would be too high for such small amounts. So uh, the example was, just a minute. So basically, the example was, for example, there will be also a cost for Visa or Mastercard to run a transaction, and if that transaction is less, if the transaction amount is less than what is required to process that transaction, then that transaction won't go through that Visa or Mastercard network. So this was basically an example of Lightning Network from the capital view. And the last example comes to Nostr, again applying more cheaper and new framework here. Now more essentially what Nostr solved is more communications. In traditional social networks, you are stuck with whatever design the company gives you. Now, because Nostr is an open protocol, anybody can build a client or app to create whatever experience they want. Now, in case of Twitter, uh, like there are rumors that Twitter had been suppressing Bitcoin content on or giving lesser views on Bitcoin content just recently, like just the rumors are like pretty fresh. I just read about it like yesterday or day before yesterday. So with Nostr, what will happen is if you figure out that this is happening, you can just build your own client and you can build your own app on Nostr protocol. So this way Nostr helps you like uh, bringing more communications. And the next framework is cheaper communications. Now, because Nostr is open, developers can build new services without having to build a new network of users from scratch. So, if you are not aware about how Nostr works, is basically if you have a Nostr key, then you can interact with Damus, you can interact with what is you can interact with any client if you have private key and public key of Nostr. I am not like an expert of Nostr, so maybe you should ask this question to a person who is technically capable of answering the questions regarding Nostr. I think we have like people like Bala, Basanta in our Bitshala group, uh, or you can figure it out by yourself how Nostr is helping make capital more like new find new ways of communication or find more ways of communication or make ways of communications cheaper. So one of the ways, as I discussed, is uh, more communications is done. Cheaper communication is basically you essentially don't have to build a network from scratch, which will help you to make that communication cheaper. Also, if the service is free, the product is you, model is absent, allowing for direct value exchange via Lightning. So this also is happening with Nostr. Then new communications. The addresses. This addresses a major criticism of centralized platforms. Now, because in centralized platforms, speech that might otherwise be censored or deplatformed can flourish because it doesn't rely on central authority. So in Nostr, because there is not a single central authority, uh, these people can talk on Nostr, but they can't on Twitter. So um, this is like new communications. So basically, some people were banned on X or Twitter, but now Nostr is a platform where they essentially can't get banned. So Nostr has identified new ways of like this is new user which can use Nostr as a platform to communicate. So yeah, for today, that's it. I think I made a good try to explain how author thinks about capital and how Bitcoin will solve our problems. The session is over. Jatin, you can stop recording and the floor is open to chat.
Digant, what is your key takeaway on how can we apply all of this in our day-to-day living, either as company builders or as day-to-day livers?
Uh, a personal thought, like, or my personal key takeaway, as you described, is I think with Bitcoin, it makes me more rational person. Um, so when let's say, if I want to invest in a Bitcoin treasury company, I will be more rational than, let's say, if I have like maybe 1 lakh rupees and I want to invest 1 lakh rupees in some company. When I am investing my Bitcoin is making me, or Bitcoin is helping me to think more and more about that company. Like there was a time in Bitcoin treasury space where the NAV multiples were much higher than 10, like 10, 15, 20. There were some companies who were trading at like 50 times MNAV. So uh, I think because uh, I believe in Bitcoin, and because I see Bitcoin as like the hurdle rate, or I see the main goal of my personal goal would be increase my Bitcoin stack, and because of all of these things, it makes me more rational and helps me to not invest in a company which is trading at 10 times NAV. I'm talking in a general sense, like there might be a company who deserves a 10 times NAV, but to me, I think because of Bitcoin's volatility and all, Bitcoin will give me the opportunity to buy that company at 2 times NAV or 1 times NAV or a discount to NAV. So uh, this is what I have seen in me, essentially. This is my key takeaway for myself.
So basically, you are saying that because you understand Bitcoin and because you understand fiat, there will be arbitrage in how Bitcoin treasury companies are priced, and that way you can be more conscious about allocating your capital to Bitcoin treasury companies at particular MNAV valuation versus buying at high MNAV.
Yeah, yeah. So I want to give an example. So today, if you can see the P multiple of Tesla, or there's a famous stock Palantir, I think it is like 300 or 500, which is the P multiple, and investors are going crazy behind that stock. So with Bitcoin, if that stock is having 10 times NAV or 15 times NAV, I will not run behind that stock. Downside is 1 times NAV because of Bitcoin's volatility. If Bitcoin is in bear market, then the NAV compression will definitely happen. So this makes me a rational investor, I think, personally. Which in fiat world, I think most of us are okay to buy Tesla at 300 PE. Uh, do you want to speak? You are on mute. Okay, I think we have lost. Okay, anyone else want to speak or have any questions? Feel free to. I think today, because of Makar Sankranti, everyone is busy in with family and celebrating. By the way, wishing you all and your families a happy Makar Sankranti. And yeah, if anybody doesn't have any question, we can end the session and call it off and meet next Wednesday 8 p.m. IST.